Everyone keeps talking about this inevitable housing market crash, so today I want to actually look at some historic crashes, look at what's going on right now, and maybe give us an indication as to when this housing market crash is going to happen, and there could potentially be one at some point in the future. If you're new here, my name's Ian Phillips. I'm a realtor in Southern California. I love everything housing data, and I upload weekly, if not daily videos diving into the housing market, talking about what's going on, as well as some city-specific videos. So if you're interested, subscribe for more, and let's get straight into the video. Okay, so this data here is the unemployment rate overlaid with the median home value, which is the blue line, and the unemployment rate is the red line. And as you can see, every single time the unemployment rate skyrockets, we do get a housing correction, if not a crash, as well as always leading into a recession. So here is the 2008 financial crisis, where home values had a pretty substantial drop while the unemployment rate was skyrocketing. And what always happens without fail is house prices start to decline, leading up to a huge rise in unemployment. You can see house prices peaked in Q1 of 2007 at around $257,000, and the unemployment rate was still at 4.6%. And then the unemployment rate actually went down into the rest of 2007, 4.4%, and then here 4.7% in the middle of 2007 is when it spiked up again, and then it just did not look back. 2008 unemployment was 5.6 every single month, going up 6.1. And then it went all the way up to 10% unemployment in 2009. And this actually happened after house prices already started going up. So house prices bottomed in September of 2008. December of 2008 is when house prices bottomed. And then while the unemployment rate was increasing, house prices actually started going up. So we are in this situation right now where the unemployment rate has been going up for quite a while. In January of 2023, the unemployment rate was 3.5%, and right now it's at 4.2% at the time I'm making this video. And for the overall housing market, prices did peak in Q4 of 2022, hitting $442,000. Since then, they have gone down. Now, yes, in some areas, they are up significantly since 2022. Where I live, for example, which is Orange County, California, prices are up 15 to 20% during this same period of time, while the overall country is actually down. So the median home value right now in the United States is around $415,000. So prices have had roughly a 8%, almost a 10% correction in the overall country. You have some areas that are down more and some areas that are up substantially more. So if we look back at all these previous recessions, which are highlighted by these gray bars over here, that is the duration of the recession. Do note that in the financial crisis, the recession actually started in November of 2007, but it was not declared until 2008. So it took them a year to say, hey, you know what? We've actually been in a recession for the last year. So that is something that is possible leading into the next recession, whenever it's going to be, either this year, next year, 5 years from now, nobody knows. But if we look back at all previous recessions, we can just zoom in to the 80s all the way up to the dot-com bubble. So in the 80s, we had periods of extremely high inflation. Mortgage rates were over 15% for a short period of time. But we also had the unemployment rate increasing. And it really didn't, the house prices didn't really have a correction until this spike in unemployment here, when we went to around 8% unemployment. And as you can see, prices took, this was 1981, they took a little over almost 2 years to recover from this mild correction that we had here. And then again in the 90s, when we had a very short recession, house prices were increasing leading up to it, and then the unemployment rate started increasing as well. It went from 5.5% all the way up to 7.8%. And you can see house prices had a brief correction here, and then they were essentially just flat for the next 4 years, 5 years essentially. So in periods of unemployment rate increasing, house prices more often than not will decline. Sometimes they stay flat. So if you are looking for this housing market crash, housing market correction, what you need to be keeping an eye out for is the unemployment. And if we look back to what it's been doing since 2022, it's been increasing. Unemployment rate has gone up almost 1% in about a 2-year period, while house prices have declined. So if we get a situation where the unemployment rate continues going up, maybe by the end of 2025 we have 5.5% unemployment. In 2026 perhaps we get to 6.5%. In my opinion, house prices are going to go through a pretty decent correction. But if the job market remains resilient, stays strong, then house prices more often than not will continue trending up, probably just have a neutral market, up 3%, maybe up 2%, maybe flat in parts of the country. But I think unemployment is going to be the major factor that people need to pay attention to when determining if we are in fact going to have a housing crash. Remember, mortgage rates have been elevated for almost 3 years now, and prices have still not had a large correction in most of the country. We had the fastest rate hiking cycle in history when rates went from 2.5% to 7% in a span of 1 year. And yes, house prices had a 10-15% correction, but the next year they just went straight back up in most of the country. And while the overall market is still down around 8% right now, we haven't really seen that financial crisis, housing crash territory at all, as the unemployment rate is still historically low. We still have very low unemployment at 4.2%. So for a housing crash to happen, you're going to need unemployment to get back to 8%, like we saw in the financial crisis, like we saw in the 80s and 90s, to cause a housing crash. Now, I don't know if we're going to see something like the financial crisis again. In my opinion, probably not. But I do think we will have parts of the country going through a correction as inventory increases. In places like Texas, in places like Florida, inventory is sky high. And in places like California, inventory is still pretty low in a lot of the desirable areas, which is not causing house prices to go down. So I think housing is going to be very location specific as to whether or not a crash is going to happen. Now, if you have unemployment rates skyrocketing in California, Florida, Texas, and most of the larger states, then you're probably going to have this median sales price declining for the next couple years, as a lot of those areas make up most of the inventory in the entire country. I think Florida and Texas make up 1/3 of all housing inventory right now, which is a substantial amount. So ultimately, to summarize, if you are someone who's waiting on the sidelines to buy a house, then you are basically banking on the fact that the unemployment rate is going to skyrocket. Now, do keep in mind, if we do go into a recession brought on by the unemployment rate, there is a good chance that a lot of people who have been waiting to buy a house could lose their job, and that will further exacerbate prices declining. Now, if you are a seller who's watching this video wondering, when should I put my house on the market? Ultimately, it's going to be up to your timeline, but keep in mind that if this unemployment rate starts to continues to increase, it's been in an uptrend for 2 years right now. If this continues to increase and then all of a sudden we get something like this, there's a good chance your home value is going to decline 15 to 20% within the next 2 to 3 years. Now, is that going to happen? I have no idea. Unemployment is a very delayed statistic, and there's a good chance that we've been in a recession for a year before the unemployment rate actually skyrockets. So if you are thinking of selling your house in 2025 or in the first half of 2026, in my opinion, the sooner you put your house on the market, the better. Will prices decline? No one knows. But the data is indicating that if the unemployment rate continues increasing, there's a good chance prices are going to decline. Now, if in the second half of this year, unemployment all of a sudden starts going down, we see less layoffs in the news, I don't think we'll have a housing crash. I think we'll just have a neutral, slight increase in home values. So that's it for the video. That's kind of how you can expect or predict a potential housing crash. Just keep an eye on unemployment, keep an eye on layoffs. We've had a lot of layoffs in the government sector and the private sector over the last 6 months. If that continues, you'll likely see prices have some sort of suppression as inventory increases. Remember, housing is going to be very, very location dependent. Where I am, we still don't have enough homes to keep up with the buyer demand. But in other parts of the country, there's too much inventory and not enough buyer demand. So that's it for the video. If you like it, subscribe for more, and I'll see you next time.